Hey guys, this video I want to look at how aggregate supply policies as a broad general category can help the achievement of an equitable distribution of income. Now, an equitable distribution of income doesn't mean that everyone has the same amount of income. That would be conflicting with efficiency, and aggregate supply policies tend to target efficiency. So what an equitable distribution of income, or this goal of an equitable distribution of income, suggests is that everyone has a reasonable standard of living. And this is characterized by having access to basic goods and services. And basic goods and services being food, shelter, clothing, education, health, and transport, just to name a few. And it also means that the top and bottom quintiles, and as we know, income distribution is counted or calculated through quintiles, should not have a large disparity. So what this means is that the income between the top earned, or the final income earned by the top bracket, should not be too different to what the income is earned from the bottom bracket. And this is a very subjective goal or idea relating to income distribution, but it is still there. So we're going to look at how aggregate supply policies can promote an equitable distribution of income through achieving efficiency. So efficiency here is the overriding target for these aggregate supply policies in order to promote this goal of an equitable distribution of income. So we're going to look at this through four different channels. So firstly, greater efficiency means that we are lowering production costs per unit. So what this suggests is that if we were producing 100 units of goods and services from 10 units of output, that means our efficiency is 10, or productivity is 10 units, or 10 pieces of production per 1 unit of input. If we were to increase this to 200 units per 10 units of output, then we are in fact lowering our production costs, because here, let's say 1 unit is $1, it's costing us 10 cents to make per unit. Now we're only costing us 5 cents to make per unit, and therefore we're lowering our production costs. So 10 divided by 200, 10 divided by 100. And if 1 unit is $1. So now we can see that by lowering production costs per unit, we are easing inflation. And if we look back to our lecture on inflation and income distribution, it is often those on lower incomes that suffer the most from high inflation. So by easing inflation, that automatically means that our income distribution, or the purchasing power of those in lower income brackets, have increased. And that makes goods and services, which I denote GNS, more affordable. That is the first channel through which efficiency helps this equitable distribution of income. The second channel is with greater efficiency and lower costs, firms become more profitable. So by lowering costs, they become more profitable because they are able to sell at a greater margin. And when they become more profitable, this means fewer closures. So they don't become bankrupt, and they don't have to close their business. And with fewer closures, this means more expansions, and this means employment. So when people are employed, that means they are moving from transfer or government payments to factor incomes. And as we've talked about in our specific lectures on income distribution, by moving from transfer to factor incomes, that would mean that they can afford more goods and services. Okay, so the third channel is increased efficiency helps the nation produce more goods and services. And so as we produce more goods and services, this increases national income. And then in turn, that would increase GDP per capita or income per capita. So when this increases, that means those even on lower incomes will be able to afford more goods and services. And so that means they will be able to live a reasonable standard of living and have this access to basic goods and services. Our final channel is this idea that with greater efficiency and a growing GDP, this means, and with higher income, this means government taxation revenue increases. So because we exist in an economy which has a progressive income tax rate, as income per capita increases, that means taxation by the government also increases automatically. And so with rises in government taxation, this would mean more provision of public services. So as a result, our final incomes, which include the indirect benefits given by the government, would increase. And as we talked about in our specific lecture on income distribution and final incomes, and how the government uses indirect benefits in the form of, say, health, public transport, parks, and all these public goods provided for by the government using taxation revenue, that actually increases the final incomes of people in the economy, and therefore close the gap between the rich and the poor. And so all this will help everyone achieve a reasonable standard of living. And this all stems back to this idea that efficiency has been promoted by these aggregate supply side policies. So as we can see, aggregate supply policies can help achieve a more equitable distribution of income so that everyone can have a reasonable standard of living.